We have been holding like a neutral view for the US dollar and for G10 currencies since December, and the levels that I defined, that we have defined, are basically being tested at the moment. So we saw like the DXY 98, which is equivalent to the Euro 112. So that's a little bit interesting to see what's going to happen next. In this G10 basket, we have seen euro weakness, we have seen Aussie weakness, and we also see a bit of dollar strength. And even if we have held a view that dollar will be range trading, we highlighted that there will be upside risk to the dollar view, especially in the case if the US economy is decoupling from the rest of the world, meaning outperforming the rest of the world, which is the case at the moment, ex-China. So we see this unfolding. At the same time, we see like German data. I mean, last night the German surveys were kind of disappointing. Consumer confidence is actually dropping. We have like a batch of like not so good news coming from major from the G10 countries. So that's why we may see another leg of dollar strength.
Okay, what would be a catalyst to drive that? We're of course waiting for US GDP numbers out tomorrow. What's your time horizon on this next leg up that you see in dollar strength?
Well, I think it could be actually kind of a tactical move, like short-term move. Why? Because what's different from last year when the dollar was rising is last year the Fed was hiking, and now the Fed has hit the pause button, and they're likely to hit the pause button for longer. We even now start to believe that there will be fine-tuning policies as data comes, something that they did in the mid-90s. So that's our view. Tactical outperformance of the US dollar. I mean, just looking at technical level, I see about like just a 2% appreciation. So that sends the DXY around 100 and the euro lower towards 109, 110. At the same time, it's not that bad for EMFX because the Fed is not hiking anymore.
Okay.
And I mean, EMFX, emerging countries still have like some favorable growth environment. We could have surprises in the second part of the year on the back of like a deal between the US and China. The Chinese data in the first part of for the first quarter have been good, and it could fit through the region and Europe. So we could see upside surprise. And I know that's surprising to talk about upside surprise because we have been commenting extensively on downside risk, etc. But we believe that there could be some upside surprise.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.